Good afternoon, everybody. Thanks for joining our webinar today. We're pleased to have so many of you join us today. So this webinar is on building business resilience, and we're pleased that Deloitte, Propel and HR Solutions have joined forces to host this webinar to provide advice and support for startups and SMEs on building business resilience in times of uncertainty. So this session will cover best practice for financial management, ways of building a long-lasting sustainable business and mitigating potential impacts of a never-changing business landscape. Before we kind of get started, I just want to do a few introductions. So I'm Greg Guilford, I'm the CEO of HR Solutions, and today we have Graham Renwick, who is a director at Deloitte. We also have a team Arden on the webinar who will be supporting with any technical questions that anybody asks as we go along. We will pause after Graham's done his presentation to answer your questions that you've raised. Obviously, there's quite a few people on the webinar, so everyone is muted. So the way that we'll try and engage with your questions is using the GoToWebinar chat panel. So you should have something that looks very similar to the panel on the screen. Quite simply, just go into the questions option and type your question, and we will field your question at the end of Graham's presentation. One of our most asked questions is, will we get a copy of the slides? So yes, you will, and this webinar is also being recorded, so it will be available to watch online after the webinar is finished. Those of you who have been on our webinars before, we know we do like to make this session as interactive as possible, and we will be running some polls as part of Graham's presentation. So now I'm going to pass you over to Graham, and he will take over the next section of the webinar.
Thanks, Greg, and good afternoon, everybody. I'm going to talk today about business resilience, and a lot of this is kind of related to my own personal experience. So it will be a lot about what this means to me and the steps that I would take to ensure my business is resilient. As Greg mentioned, I've got a number of slides that I'm going to go through, but please raise any questions and we'll try to make sure we've got enough time at the end to answer as many of these as possible. Okay, so just that's the agenda of what we're going to try and cover today. And just to introduce myself, a little bit more about me. My name's Graham Renwick. I've been with Deloitte for 2 years now, and I lead the Propel team within Deloitte. And I'll tell you a little bit more about what the Propel team does. But personally, I've returned to the profession, so returned to Deloitte, having spent the last 25 years working in industry, and I've worked in a number of commercial and finance director roles in a wide number of companies, actually, as diverse as healthcare to food manufacturing. I've worked for FTSE 25 companies and also family-owned businesses, so it's sort of different perspective across all of those types of businesses. My experience covers both statutory financial responsibilities, but also my roles have always been quite commercial. So building business resilience, ensuring funding's in place to meet the needs of the business, and that would be whether that was for major acquisitions or simply to ensure the day-to-day survival of the businesses. I think just, my first role that I ever had, actually, I was working in a company which was very short of funding, and on a daily basis I had to work out how much money we had in our bank account and which suppliers we could actually pay. So at a very early age, I think I was still at university at that point, at a very early age, face to face with the realities of businesses surviving on a daily basis. So what is Deloitte Propel? So Propel are actually a division of wider Deloitte, so part of Deloitte LLP. It was set up 4 years ago with the aim of supporting the SME market. And so if you think about the sort of audit firm and consultancy firm, which is Deloitte, they tend to work with predominantly FTSE 100 or high wealth clients. What Propel enables us to do is work with the sort of 90% of other SME type businesses who we wouldn't normally get to work with. and so it's a great opportunity to be involved in the wider marketplace. What we provide, and I'm sort of clicking through here, but what we provide is a technology-enabled end-to-end accounting service. We use cloud-based software, but we're supported by a team of accountants and bookkeepers with Deloitte expertise. And essentially, we can provide a full range of services from bookkeeping, provide monthly management accounts. We do VAT, payroll, year-end accounts, and corporation tax returns, as well as obviously being able to tap into the wider Deloitte resource, covering things like research and development claims, EIS schemes, any other tax advisory work. So we can cover the whole remit of what an SME business needs on a day-to-day basis. As a business, after 4 years, we've now got about 800 clients, and of those clients, we've supported quite a few of those, specifically over the last few months, with things like the Furlough scheme, applications for loans, updating cash flow forecasts, that type of thing. Everything they need really to support them through the current crisis. Before I move on to the wider presentation, I'm just going to pass back to Greg. We've got 3 questions that we just want to ask you, just to get a feel really for how you feel about the current environment and how your business is performing. So if I could just hand back to Greg.
Okay, thanks, Graham. So we're going to just launch a couple of polls for those of you who've done them before. So I'm just launching the first one. So you should see the question on your screen, which is, when do you think business will return to normal following COVID-19? And please just tick the one that is most relevant to you, or what you think the time frame will be. So you've got Q3 2020, Q4 2020, Q1 2021, and Q2 2021. I can see that quite a few of you already chosen your answers. I'm just going to give it a few more seconds. Okay, I'm going to start to close the poll now. I'm just going to share those results there. So you should be able to see on the screen that the responses. So 5% said Q3 2020, but most respondents, with 41%, are Q2 2021. So I'm just going to launch the next poll we have for you. So do you think the government have provided enough economic support to combat COVID-19? And this answer is just simply yes or no. So quite a few of you responded already. I'm just going to give it a few more moments. Okay, I'm going to close the poll now. I'm going to share the results, which are pretty interesting. Referendum result style. 52% yes, 48% no. It's a real mix of opinion there. And I'm just going to launch the last poll we have for you, which is, have you taken advantage of any of the government initiatives to combat COVID-19? Quite simply, yes or no answers again. Okay, so most of you have responded. Just give it a few more moments. Okay, I'm going to close the poll now. So again, the other way now, 52% no, 48% yes. So interesting results coming through there. Okay, so I'm now going to pass you back to Graham.
Okay, thanks, Greg. And very interesting. And I think I've seen these polls done on a couple of occasions actually, and I think what seems to be fairly unanimous is that whilst the government are trying to provide some support and to help business through this period, it is likely to be a very difficult time for businesses, and this isn't going to go away quickly. So I think, today's session where we talk about business resilience and how we move out of this current crisis is a very important topic for everybody to consider. Okay, so what is business resilience? And when I think about business resilience in sort of simple terms, it's the ability of a business to continue to operate in times of uncertainty or when facing major challenges. And if I think about some of the big businesses that I've worked in, we talk very grandly about things like business continuity planning. But all business continuity planning is simply that management are thinking about the most likely scenarios which could impact their business, and they develop a plan so that they know what to do should a crisis occur. So I actually worked in the past for a food manufacturing company, and within their plan was what would happen if the factory with all the ovens actually caught fire and burnt down. And we had a plan in place so that if that happened, we knew what to do and we could get back to production fairly quickly. It did actually happen. The plan was put into place, and because there were already plans in place, we had an alternative supplier lined up in the short term, and we had plans in place to acquire a new piece of land and build a new factory very quickly. The consequence of that, because we were well prepared, was that we only lost 2 weeks production, and a new site was actually up and running within 9 months. And so, if we hadn't have been prepared for that situation, that would have taken an awful lot longer and had a much bigger impact on profits. For smaller business, I guess the impact is much more stark, and the reality is more about how do I ensure that I can pay my debts when they fall due. And so I think about things like a number of football clubs, particularly in recent times. So there have been the cases of Bury and Bolton, and the issues they always have is they're trying to manage their business on a day-to-day basis. If they don't get the supporters in or the sponsorship, then sometimes they can't pay their players, and so they have issues there. But almost inevitably, it always comes to a crunch where they're forced into administration because of the issue of not being able to pay the HMRC. And the problem they've got here is that they are managing the business daily, but what they are not thinking about is the longer term planning and the liabilities which are going to come up further down the line. And in all of these cases, once it gets onto the news, then the whole issue is about the negotiation that's going on with HMRC to defer tax liabilities. But the issue they've got really is that they haven't been planning properly and have the right cash flow forecasts in place to make sure they can meet those liabilities. And I'm sure coming out of this, not only small businesses, but certainly things like football clubs are all going to be in a similar situation in terms of how they plan and move forward out of this crisis. But there's, I don't want it just to be a kind of negative thing. Business resilience is not just about avoiding any shocks which come along. Business resilience is also very positive in terms of being able to be proactive and ensuring that you're agile enough to take advantage of opportunities. And I think, and I'll cover some of these later, but there are numerous examples of businesses which have adapted their offering to take advantage of the opportunities which are available at this time. So, from as simple things as pubs opening up food delivery services, taking advantage of being able to be a takeaway, all opportunities that meet a current need, because people are on lockdown and can't go out. So these are opportunities that people can take advantage of and are taking advantage of. So when I was thinking about business resilience, a slide came to me, which I think is very apt. And so the quote is, turnover is vanity, profit is sanity, but cash is king. But why? And what does that mean? I think it's a famous quote, which most of you probably have heard of. I don't think anybody actually knows who coined the total phrase. Certainly, cash is king is attributed to the CEO of Volvo following the 1987 stock market crash. But I can certainly relate to all of this. So throughout my career, I've been exposed to a number of different strategies, and I'm going to give you my views on why I think cash is king. And it's certainly cash is fundamental to business resilience. But let me start with the first bit, which is turnover is vanity. And I think all of the companies that I've worked for in the past, there's always been a sales related bonus. And what that is doing is encouraging the sales team and management to drive the sales line at all costs. The thinking being, well, if we grow the sales line, then everything else will follow. Everything will be fine. Well, it doesn't always work like that, unfortunately. So the major issues that I've encountered with this is particularly around promotions. So it's very easy to increase volume and the overall sales. But often this can just lead to increased volume, but at reduced cost. And in some cases, so one of the businesses that I worked for and walked into, we were promoting one of our products significantly. The volume spike on promotion was huge. There was a marginal increase in actual revenue, but actually we were selling below cost. So we were losing margin on every product that we were selling, which clearly isn't sustainable in the long term. I think what it also does is it can also encourage consumers just to buy on promotion. So there's this thought is, well, you get them in, get the consumers in, they become loyal to the brand, and then we'll increase the price and we'll start to sell at full price. Excuse me. Well, that just doesn't always happen. And what we found in a number of instances was people would buy when the product was on promotion. They wouldn't buy again for 3 months until we were back on promotion. So clearly there was an issue there. The final issue I just raised with this as well is in a competitive market, and so they're different. And this is a different business that I worked in where we had a competitive product. We would sell on promotion. There'd be a volume spike. The next period, the competitor would sell on promotion, and they would just take all the market share during that period. So that is why, that is why the phrase turnover is vanity has been coined, because actually you can grow your top line, but if all you're doing is reducing your profitability and not actually gaining any consumers, then there's no actual sustainable benefit to this. And in longer term, depending upon the size of the business, this reduction in profitability can have can cause a significant test to business resilience. So in terms of turnover, there needs to be a sensible plan for growing sales in order to ensure continued business resilience. Growing sales at any cost may look good, so it may be a vanity, but it is just not sustainable. The second part of the quote is profit is sanity. And so clearly we need to have a focus on profitability and ensure that sales are actually helping to grow the profitability of a business. A term that I heard quite early on in my career, and which I've used ever since, is profitable growth, and something I've always tried to implement. So, being an accountant myself, I've always tried to focus on an appropriate selling price with a tight control of costs. So that's great. Driving a profitability is fantastic. However, we need to be careful, because even very profitable businesses can still go into administration if they don't have the cash available to pay their bills. So if you're not concerned about how you collect your revenue and no control over your expenses and when those are being paid, you can quite easily run out of cash. So if profitable businesses run out of cash, then they can run into financial difficulties just the same as a poorly run business. So cash in the bank is absolutely necessary to cover liabilities and also to take advantage of opportunities. And for me, cash is the cornerstone of a resilient business, and hence why I think cash is king. So I've just talked about the importance of cash, and cash is key to ensure that we meet the day-to-day funding of the operations. So working capital is the amount of funds needed to meet the day-to-day operations of a business. But I'd actually like to just turn that round, because in reality, how we manage the day-to-day operations of the business has a major impact on what cash we need. And so how we manage the day-to-day operations and how we manage our working capital can be the difference between having cash in the bank or needing an overdraft or a loan. So I'll start by defining what is included in working capital, and then I'll move on to a real life example. So the two businesses that I've included in the example, whilst the turnover isn't relevant, the way they manage working capital absolutely is, and I think provides a good example. So I'll start by defining what is included in working capital and then move on to the example. So generally included in working capital is your stock, and stock can either be purchased or produced. And basically stock is what you need to meet your future sales. Debtors and how we manage this is key. So debtors are basically the money that people owe us for the sales that we make. And if we don't get paid for our sales, then they're actually worthless. So it's key to how we manage our debtors is key. And then we've got creditors, and creditors are basically the money that we owe, whether it's for stock, raw materials, or any other services that we buy. And as I mentioned in the stars above, the approach to working capital can be the difference between having cash in the bank or actually needing a bank loan. So let me give you a very simple example. So at the top there, we've got 3 months of sales, cost of sales, and gross profit. So we're basically selling £1 million a month. We've got cost of sales of £500,000. We've got gross profit of £500,000. So in both instances, the companies are making a healthy gross profit. However, if we look at company A are really cautious, and they think they need 3 months worth of contingency stock. They want all of that stock in hand because they want to be able to meet any orders that they come through at any point in time and have 100% service levels. However, the cost of that is that they've got to have 3 months worth of cost of sales as well. So they've got £1.5 million sitting in stock. With debtors, they've been told essentially by their customers that they're going to get paid on 60 days. So they've got 60-day payment terms. And so they've got £2 million worth of debtors sitting there in working capital. So that's cash tied up that they can't use. And actually, in terms of creditors, they want to pay their creditors, they want to pay their suppliers very quickly. They think it's key that their suppliers, some of whom might be quite small, are paid quickly and remain liquid. So they've got 15-day payment terms. So they actually only owe £250,000 at any point in time. So if you see there, company A actually requires £3.25 million worth of cash just to fund those day-to-day operations. So that's money either that they would have had to utilise somewhere else, or worst case scenario, they're actually got an overdraft to fund this, and they're actually incurring interest on this. If we look at company B, they're adopting a completely different approach. So with stock, they don't want to hold stock. It's all about just in time. If they meet, they will do their best to achieve 100% service levels. If that's not achieved, well, if they can achieve above 95%, that's great, and they'll replenish where appropriate. So they're only going to hold 2 weeks stock. They've agreed 15-day payment terms with their customers. So they'll only work with customers who are going to pay within 15 days. Actually, in this instance, they offered an early payment discount to be able to deliver this. So that, that is something to think about. However, they were achieving 15-day payment terms, even with the major retailers. And with the creditors, they decided they had agreements in place with the suppliers they wanted to work with. Those suppliers were on contracts, and as part of that, they were paying in 90 days. So as you can see, the consequence there is that company B has actually got a cash benefit from their working capital. So they've got £750,000 sitting in the bank that essentially is being funded by not paying their suppliers, and that is sitting in the bank, and they can utilise that to take advantage of opportunities. So as you can see, very different approaches and very different impact in terms of the cash that's required to be able to meet working capital. Now, I actually worked for company B before I worked for company A, and whilst company B's approach was very aggressive, it was incredibly successful. When I went to company A, there were a whole load of good reasons why they wanted to operate in the way that they did. But over time, we changed that. We got debtors down to 45 days. We got the stock level down to a month, which didn't have any significant impact on our customer service. And we worked with and discussed and negotiated with our creditors, and we moved all of our creditors between 60 to 90 working days, payment days. And so quite easily, what we got rid of was a very expensive overdraft that we needed to fund our working capital, to move to a position where we'd got rid of the overdraft, and we're saving probably in the region of £400,000 a year, actually, in overdraft charges, which made a significant impact to the profitability of the business. So as I say, just I guess to summarise again, company A, very cautious approach, but using cash to fund working capital. Company B, very aggressive. I think to summarise, I've been through the two examples, but to summarise, actually small changes can make a huge difference to the cash which is tied up in working capital. And freeing up that cash also makes a huge difference to the resilience and profitability of your business. And just to the final point that I would like to make about this is achieving working capital gains can be done quite easily. But it is normally part of a negotiation. So, please ensure that the result is cost effective for you. So offering an early settlement discount or going to invoice factoring, can be quite costly. And actually, if you're struggling with your profitability, it may be something that you don't want to do. So you need to consider that and ensure an appropriate balance is maintained. So reacting to the short-term crisis, we've talked about business resilience, and we've talked about how to control working capital. But in the current crisis, those fundamentals can be thrown out the window. And despite having great fundamentals in place, there are always events that create uncertainty and require changes to our plans. Currently, and most obviously, COVID-19 is such an event. Overnight, the business landscape has changed with nobody really expecting it. And I'd suggest, to a large extent, those that have emerged relatively unscathed has been to a large slice of luck in some cases, rather than being fully planned. So just talking about Deloitte, at Deloitte, we had a lot of business continuity plans in place. But one of the things we'd never tested was our capability of thousands of employees in the UK all suddenly working from home. We realized this was something we needed to test, and we had a test day planned. That test day ended up being the day that lockdown was announced. So it wasn't a test anymore, it was suddenly reality. Now, we could have had a major issue if our IT capability had failed. And you know, trying to address that remotely could have been a major problem for us. Thankfully, that wasn't the case. So what do we need to do to maintain business resilience in the middle of a crisis? And I've got a couple of points here that I want to make. I think the key thing is the ability to adapt, to be able to take advantage of opportunities, tailor your offering where appropriate. I was talking to a team yesterday who offer a HR and health and safety service to some clients. They're actually part of one of the major banks. And their team was split broadly 50-50. I think they had 10 people supporting HR and 10 health and safety. In the early days of people going to lockdown, they were inundated with requests around the furlough scheme and what they needed to do with regard to redundancies and all the rest of it. As the crisis has evolved, they very quickly realised that health and safety was going to be a major issue coming out of this crisis. And so they've retrained a lot of their HR consultants in health and safety. And that's going to be in huge demand as companies struggle with the complexity of how we get teams back into the workplace. And I know, you know, from personal perspective, how we actually get people back to the workplace and what this looks like going forward is a major challenge for us. The second point I would make is that we need to be proactive. So we need to drive the agenda and decide what we are going to do and focus on the things that we can do and not what we can't do. The government have done their best with some of the schemes that they've put in place, but we can't rely on the government to provide all of the answers. I mean, obviously, utilise support where appropriate. The bounce back loans, CBILS, furlough schemes are all great initiatives to help support people and take advantage of those where appropriate. But it's down to us to manage our businesses and ensure that we're robust and in a good place going forward. So what actions can I take and can we take? And I guess the key point in the short term is minimise, and particularly in a crisis, is minimise the amount of cash that you spend wherever possible. And so on the attached slide are some basic ideas, but they are effective in managing cash flow. So I'll just comment briefly on all of them. So repair, don't replace. There may be some machinery or equipment where it is much more cost effective longer term to replace. But in the short term, where you haven't got much cash, spending £100 on a repair rather than £10,000 on a replacement is absolutely the right thing to do. You know, maintain that cash flow as much as possible. Lease, not buy. The same principle applies. If we need new equipment or machinery, look at leasing in the short term and not buying. Again, this may not be the most cost-effective approach over 3 to 5 years, but if you've got cash flow constraints over the next 3, 6, 9, 12 months, then minimize the amount of cash which is going out of your business. So Not always the best options, but longer term certainly worth the consideration during a crisis such as we've got at the moment. Utility costs and production costs. Look at how we can operate more efficiently. If we have to adjust production, if production is less than what it is normally and you don't need to run full shifts, look at how you can manage this effectively to reduce costs, particularly during times where there is spare capacity. So operate when your utility costs are lowest. You know, there's as part of the costs that you get from electricity companies in particular, costs are higher at certain peak periods in the day. Make sure you avoid those peak periods and produce at the times when costs are lowest to you. And the final one, and probably most important point that I would raise here, are the staff costs. These are often the main costs of any business, and clearly a difficult one to be able to address. So the first point currently is, how relevant is the furlough scheme, and how do I best utilise this? And you know, I'd urge you here, if you don't understand the scheme or need help in how best to utilise, how to structure your business around the furlough scheme, because in some cases it's not clear how best to utilise the scheme, then you know, certainly Greg and HR Solutions will be able to support you and offer appropriate advice around this. Clearly, this is something the government want to support, and they want people to maintain employees within their business. So look at how you best utilise that in the short term. Moving forward, however, whilst the furlough team is a short-term solution, you also need to ensure you've got the right people and the right structure in place, both to reduce costs in the short term, but also to ensure success going forward. The structure that you had before the crisis may not be the same structure that you need following the crisis. Things may change. The way you approach opportunities may be different. You may need a slightly different skill set to what you've got currently. So put plans in place and address those issues early. And I think the one thing I would say about staff, and I'll come on to this again on a later slide, but communicate with your staff. We've got examples of some businesses who have put their staff on furlough and haven't spoken to them since. And then all of a sudden, the government announced that we're coming out of lockdown and you can return to work. And there's been no communication with staff over the last 3 months. So, you know, people are not clear what's going on, what's expected of them. And so I think it's important that you continue to communicate. If staff are on furlough in particular, keep them involved in the business, communicate to them about what's going on in the business and what your plans are going forward. Because if they buy into the plans, then they're much likely to be more productive as we come out of this. I've spoken at length earlier about working capital management, and working with suppliers is effectively part of that process. So are there any suppliers or creditors that I can work with to increase payment terms and defer payment? The most obvious, and the one encouraged by the government, is HMRC. So they've actively been encouraging business to defer payments where impacted by COVID-19. VAT payments can be cancelled and deferred to March 21. And corporation tax, PAYE, national insurance can all be negotiated and time to pay agreed. VAT, the deferments was agreed to March 21. Corporation tax, PAYE and NI was initially a 3-month deferral, but that will continue to be negotiated ongoing. Think about what other options you've got for either deferring staff payments or reducing short-term costs. So there are numerous examples of companies who've asked their staff to take short-term salary reductions, and often employees are happy to accept this for the certainty of guaranteed future employment. So, you know, are you prepared to accept 80% of your salary in the short term if I can guarantee you a job going forward? And a number of businesses have been working on this principle and agreeing that with their employees. So certainly something that you should be thinking about. And I think the final point there is just negotiations with other suppliers and reducing stock levels. I don't think this is relevant to a crisis particularly. It's part of ongoing business resilience. So these things should already be in place. But if they're not, then the focus now should be on doing this. Speak to your suppliers. I think you'd be amazed by how many of them are actually receptive to deferrals in payment. A lot of suppliers would much rather be paid, even if that's slightly further down the line than a business going under and not paying them anything at all, or they get 5p in the pound or whatever that might be. So definitely, you know, don't be afraid to have those conversations with your suppliers. And the final point here is just obviously, and I think this, you know, goes without saying, so I'm not going to dwell on it, but if you've got discretionary costs, then in the short term, simply don't spend them. So if you can avoid travel, certainly things like entertainment, there may be some consultancy costs which are based on longer term projects, and certainly some sales and marketing costs, then you need to look at the appropriateness of those in the short term. I think what I would say with some consultancy costs, then certainly if there are consultants who are helping you to get through the current crisis, whether that be from a HR perspective or providing financial advice or whatever that may be, then, you know, clearly somebody who's going to help you through this crisis is probably worth the investment in the short term. Okay, so that's a bit about business resilience. I just want to finish up with some thoughts about returning from the lockdown. And I think whilst all of us will agree the last 3 months have been extremely difficult for all businesses, we have been supported through the process. And in a lot of cases, we've had to just react to instructions from government. So we're told to go into lockdown. So, you know, we've had to work from home where appropriate, and we've had to go into lockdown. We didn't actually have much choice about how we manage that. The government have provided some initiatives to support us, and individuals as well through what has been a difficult period. However, you know, that support is not necessarily something that's going to continue forever. I don't think it's unrealistic to think that the next 3 to 6 months is going to be more challenging for all of us and for businesses as we continue to adapt and we get used to and we define what the new norm looks like. And I think for me, undoubtedly, those businesses which are the most proactive and adaptable will succeed with the opportunities that arise. I think it's clear to me that business as normal is not going to be normal. It's never going to be the same as what we were used to previously. So let me just consider some things as we move out of lockdown. So as we actually return from lockdown, there's 4 points that I would stress, and that I think we all need to think about and take on board as we move forward. The first would be the ability to adapt. We need to be proactive. Communication with our employees is absolutely vital and is key. And the final point is, please make sure that you've got a very clear view on your cash requirements and pay increased attention to your cash flow forecasting. If resources are tight and you're cash constrained, then it is absolutely key that you keep on top of your cash flow forecast and understand what is coming in and what is going out over the next few months. So let me just return to the slides. So I've got 4 key buckets that I just want to discuss briefly. The first is return to work. And my key question here is, what does this actually look like? Does this need to be the same as what we did previously? And what learnings have you got from the lockdown period? Certainly, Propel as a business have seen some significant advantages from working remotely. We are, in any case, a cloud-based solution, so we don't have any problems there. But what we've seen some significant advantages from using Zoom for meetings, where previously, myself in particular, my team is spread over 3 very remote locations in the UK. Getting to each of those locations is very difficult. Includes a lot of travel and includes the same message in a lot of cases being shared 3 times. So a big input of time and effort to get the message across. I've been able to do that on Zoom a lot more efficiently and a lot more effectively than I have done previously. So there are benefits to be had. So going forward, what can you do differently? What has worked really well that you can incorporate, and what used to work really well in the old environment that you can go back to? How can I adapt to opportunities? So, what opportunities are out there that I can tweak my business model to take advantage of? So the example I gave previously, a number of pubs who were offering takeaway and delivery food services, would that be something they'd continue to offer going forward? Well, it may be, and it may be something which stays. And if you do return to the workplace, then the other thing that you definitely need to ensure is ensuring that the workplace is safe for employees to return to. So it's easy to say, yeah, we'll all just go back to the office. There's actually a huge number of considerations around social distancing and providing a safe environment for our employees to go back to. So please don't underestimate that. And again, people like Greg and HR Solutions can be ideally placed to support you with that move back to the workplace. The next point, and again, I think certainly for me, my employees are key to my business. My business doesn't succeed without the team. So what are the implications for the team? Are their roles going to change? Is there anything different that they need to be doing? What training do you need to put in place to support them going forward? I think more crucially, what are the resource requirements? So have I got the right structure to meet my future business needs, which may be different to what I've had previously? Do I need to retrain people? So it might not be about redundancies. It might simply be about tweaking people's roles and giving them the appropriate support to be able to do that going forward. The furlough scheme has been of significant benefit to a number of clients that we've got, and clearly the take-up around the country suggests that it's been key to helping people during this current time period. But how long do you need to use the furlough scheme for, and how do you actually best utilize it? So, in some cases it's probably very easy, where businesses have put their whole team on furlough scheme. But as you return to more an active business, which people do you need back in the business? How do you best utilize return to work for some employees and maintaining furlough scheme for others? And do you rotate that? So you're introducing gradually some people back into the business. Again, that's something you need to think closely about and make sure that's the right model for what you're trying to deliver. And my final point there is communicate with employees. Get them involved in any discussions and ensure that they buy into the plans that you've got going forward, whether that's for the direction of the business or whether that is around the direction of their future roles and what you expect from them going forward. So I think a great example is the government. So the government, with all good intentions, declared that some schools would return to work from the 1st of June. But they made that decision, obviously with some consultation, but immediately you get the teachers' unions coming back to them and saying and declaring quite publicly, we haven't been involved in this decision-making process, it's not going to happen, and our teachers not going to return back. And clearly there's negotiation and discussion that needed to be had there. That could have been done a lot more effectively by communicating with the teachers and getting them involved in the decision-making process before it was announced that schools were simply going to return. So over-communicate, particularly with people who are not in the business. Give them all of the information they need, and try to ensure that they buy into what you're doing going forward. So opportunities going forward. So fine, this has been a very difficult period. There are going to be a huge number of opportunities for people coming out of this period. So some key considerations for everybody. What works really well now that I want to keep going? And if there are things that are working well, make sure that you have locked down any key contracts. So either with customers or suppliers. Make sure your supply chain is robust and can continue to support you going forward, and that your customers remain in place. But also think about, and this is as important, what do I need to change and how do I adapt to capture the new opportunities? And then my final point here is around business performance. And I've already stressed the importance of cash and updating cash flows. But think about how the business has performed during lockdown. What has worked well and where are there ongoing issues? So what do I need to continue doing when I come out of this crisis, and what issues do I need to address? So I'd urge you to update your cash flow forecast and ensure you have sufficient funds to continue in the short term. And where possible, try to plan assuming limited government support going forward. Now that may not be the case, but don't assume that the government are going to always provide the initiatives and the funding required to continue to maintain your business going forward. If I go back to the earlier questionnaire, and I can't remember which way around it was exactly, but broadly half of you didn't believe that the government had provided enough incentives and initiatives to support businesses going forward. So, whilst they will undoubtedly do what they consider is right, it is important that you look after yourselves and get the funding in place that you need where possible. And the final point I would make on that is, if you do need additional funding, then speak to your bank early. I think it's better to approach early where you've got a viable business plan and a cash flow which makes sense, than to get to a position where you've run out of cash and you're going to the bank in an emergency situation, because at that point the answer is likely to be no. If you go there with a feasible and sensible plan, then you're much more likely to get a positive response and favourable terms in terms of funding. So just to summarise that, and a key reminder of my 4 points: be adaptable. There are opportunities out there. Be adaptable and take advantage of those. It's not going to be business as usual. Be proactive. So manage your business. Don't leave it to the government or anybody else to put initiatives in place. Manage your own business. communicate with employees and over communicate with employees, and manage your cash flow and have a clear view on your cash requirements going forward. We have a slide that we'll include in the deck, which will go out after this, which just looks at and provides a summary of all the government support that's available. And I wasn't planning on including this in this presentation anyhow, but that will be included in the deck that goes out. So that is it for me, but happy, I appreciate time is running tight, but happy to answer any questions that have been raised during the course of the presentation. Thank you all for your time.
Okay, thanks, Graham. So I think it's really informative, so thank you for that. There was a few questions that have come in, and I just wanted to summarise a few things before we move to those questions. I think one of the things you mentioned about stakeholder engagement is pretty key, and you know, communicating with your key clients during this time and understanding their situation helps you plan, because if you know that they're sort of experiencing financial difficulties, then you can expect that your invoices to be delayed as well, which is ultimately going to affect your cash flow going forward. Some of the points you mentioned there about HR support, obviously we are around to help anybody who does have any HR questions. I wasn't going to go too much into it now, but we have run some webinars around, you know, supporting people getting back to work and touching on some of the points you've raised there already, which we're happy to include when we sort of follow up these webinars as well. I guess just for some of the other points on there about furlough, you know, Rishi Sunak is due to announce what that future scheme looks like, and some of our clients are already trying to sort of plan ahead for that. But I do think that perhaps some people are not sure how to sort of bring people back from furlough and deal with that situation. And unfortunately, some clients will have employees who have been with them some time, so actually either, you know, making that tough decision about redundancies will actually cost them some money. So, you know, they've had the benefit of having staff on furlough, but if that goes, they might have that extra cost at the end in terms of having to make redundancy payments. So people do need to plan for that in their cash flow as well. Some of the questions that have come through are really around cash flow. So cash flow isn't an easy thing to do, and obviously there's a variety of different accounting softwares out there that can support. But do you have any recommendations of a sort of a cash flow tool that people can use, or what types of things need to be included in a cash flow forecast?
Yeah, sure. I mean, as a business, the tool that we provide to our clients. So the software that we use is Xero, which is the basic accounting package, and then we run cash flow forecasts on a tool called Futurely, which is linked essentially to Xero. That said, cash flows don't need to be over sophisticated. They can be done very easily on an Excel spreadsheet, and the key thing is that you capture your anticipated income and absolutely make sure that you have got captured within there all of your future costs. And I appreciate in a lot of instances, forecasting income in difficult and uncertain times can be difficult, but just be realistic about what assumptions you're using. So if during the current crisis, as an example, there's a client who's got a wholesaling business and a chain of cafes. Well, you know, during the current crisis, the chain of cafes have sold absolutely nothing because they've been closed. The wholesale business has still been performing at 80% of what it was previously. So, you know, there's a realistic assumption in there, which is the wholesale business will continue at 80% of previous sales, and the cafe will produce nothing. So I think that, you know, my advice would be put in all of the costs which are known, because they're not going to change, and you know when they're going to be incurred, and then be realistic and sensible about your assumptions in terms of income in particular going forward.
Yeah, that makes sense. Just on that point, yeah, so we've seen a few clients who have essentially evolved their business operations during this time, where they have had a cafe and they've switched to home delivery, and obviously that will affect what happens to staff when they come back, and it might be a change of roles. So there might have been a shop assistant previously, but now there might be a order packer and or delivery driver. So all of those things will need planning and incorporating into their forecast and their business plans going forward. And whatever has happened with COVID, some things good have come from it, and people have evolved their business, and some have risen to the challenge and perhaps even benefiting from this situation. So any of the questions?
I think, sorry, Greg, just to build on that, I think, and it doesn't just happen. So you don't just evolve your business, you don't just walk back in and everybody changes to what they need to do now. There's a lot of planning and preparation that's needed to make sure you do that as effectively as possible.
Yeah, it's good to sort of plan for every situation. One of the questions was about the deferral of VAT. So is that a process you need to phone up HMRC for, or does it happen automatically?
No, you can simply cancel your direct debit, and that will happen automatically. So if you pay by direct debit, then you can simply cancel that, and it will be deferred to March 21.
Okay, thank you.
All of the other taxes, you do need to speak to HMRC and agree time to pay.
So obviously PAYE and corporation tax, that kind of stuff you're referring to.
And national insurance. And so they will defer that as well, but you need to you need to agree that it doesn't just happen.
Okay. I'm conscious of time, so there are a few other questions, but we will circulate those to you, Graham, so that we can go back to our audience afterwards. If anybody does have any other questions they think about sort of post webinar, then you please do reach out to us and we can pass those on to Graham and get his input on those as well. So post webinar, you will get an email with from us asking for some feedback, and we'll also include the additional documents that Graham's referred to as well. And we did record the webinar, so there'll be a link to watch that again as well. Those of you who have been on our previous webinars will know that we have done several webinars during this period, but at the moment we've only got one further one scheduled, which is on the 11th of June, which is personal relationships at work. However, we did have a meeting this morning, and we will be putting further webinars up probably later this week, and that will see us through for the next couple of months. So please watch out. You can view those on our website and sign up from our website, but if you are in our newsletter, then you will get first invite to those webinars as well. So if you're not on our newsletter already, then please do sign up and you'll get first refusal on upcoming events. We will put that link on our follow-up emails for you as well. So some of the points Graham referred to are kind of people related. So one of our previous webinars was about return to work and that practical guidance for employers. It was quite a long webinar, but we did cover a lot of content in there, and that was about how to unfurlough people, thinking about change of roles, etc. And there was also inclusions about how to risk assess the working environment for opening up to have employees back at work. That is on our webinar archive page, and we'll include a link to that on our follow-up after this event. There are a series of other webinars that we've done throughout this period, and they're all on demand for you on our webinar archives page. So that's the end of the webinar. So just one more time, thank you, Graham, for those insights. If anybody does have any questions, we will follow up and pass those on to Graham as well. But I'm just going to close the webinar now. So thank you everybody for attending, and once again, thank you for running this webinar for us, Graham.
No, thank you.